Oh, I think we're in. I think we're open. Let's have a look. Yeah, good morning, everybody. How's everybody doing? I guess it's not a good morning where you are. Pretty good evening. Great stuff. Thanks, Sam. So, good evening to all of you in Singapore or whichever part of the world you're in. Good to have you aboard. Hi, Chun. Interesting week ahead. Um, Interesting because it's not very data friendly for trades in a lot of ways. But let's have a look at what we have. Um, I'm going to share this screen here. Now, what it does mean when it's kind of not, when I say not data friendly, I mean there's not a whole bunch of specifics that move the market. We got an interest rate decision from the ECB this week, but that's kind of priced in. And the one thing that could move it, of course, is if there is a surprise. So if there's a surprise, then we'll expect something else. But as it stands, there's um, there's a couple of data points that I think of interest, but generally speaking, the first week tends to be sort of quite thick on data, and as every month is, this month's been no different. So we've seen a lot of data come out last week that was significant. Market moving data last week was, as always, quite thick. And what you'll notice is that as the weeks pass during the month, the data gets less significant. So you might still see, some of the smaller kind of nations in comparison to the US, like the Australian economy or the New Zealand economy or even the Swiss economy, sort of posting things that are significant to them particularly, but not necessarily market moving. One thing that is notable is that seasonally we are in a risk off kind of period when it comes down to stocks, and that will tend to sort of like filter through to some of the currencies. And the reason seasonally we're in that is that we are the first year of the presidential election effectively. So Trump was elected in November. So this is kind of, year two, really. So that was year one. We're in year two. And September tends to be pretty meek when it comes down to gains, regardless of a presidential year. But you add the presidential second year, and and it does tend to kind of weaken stock. So we can have a look at that as well. See where the Nasdaq is and the S&P. The suggestion from seasonals is that they will come down a bit. So let's have a look now. GDP from Japan. So you have to recognize, which numbers, even though they seem significant, won't necessarily create an opportunity. And the reason they won't create an opportunity is that this stuff's already been priced in. So you really get three sets of kind of data points. You get the leading. So the leading data points. Now these ones are sort of like things like business confidence and PMIs and stuff like that. So the leading in the leading numbers, the consequential numbers, so consequence, and the what would we say, leading, consequence, and I guess let's just put actual. So this is really sort of like the numbers that after the leading numbers kind of happen. So the leading numbers sort of like suggest what's going to go on with an economy. The actual numbers kind of confirm what's going to go on with the economy, and the consequential numbers are sort of, where that is. But everybody knows what those numbers are going to be because of what the leading into the actual kind of lead to. And something like GDP is a consequential number. That's a consequence of things like PMIs suggesting that there's some growth out there. Then you might get things like actual manufacturing sales kind of filtering through, and then you get the kind of consequence of that will drive GDP. unemployment and things like that will drive GDP. Unemployment will fall into this one as well. Leading might be things like initial jobless claims. That might be a leading indicator. Actual number would be something like unemployment numbers, and then consequential again would be sort of like down to GDP. So you've got to recognize what number that what number's being released, and that's important because if GDP is expected, if GDP's been pre-calculated, it's already priced in. Now that doesn't mean you can't trade it because they might have got the priced in calculations wrong. And if they do get that wrong, then the market will move significantly. So you're sort of looking for these numbers to see whether they end up in line with expectation. The forecasts become really important here. So they're suggesting no particular change in growth from Japan, so still bubbling along quite well. Building approvals is a leading indicator because building approvals are things that builders have to go and get contracts for before they go and do the building. And then the construction employment might be sort of like an actual number, the kind of people that need to be on those building sites, and then you'll see the actual building, the new home sales will be a consequence of that. Okay, so building approvals, that is a leading index, but we're not really that interested in that. Syntex investor confidence, this is a leading index as well. That might give us a little bit of information, but a lot of these are quite small. Consumer sentiment's important, but the real number I'm looking for is business confidence from Australia. So Tuesday really would be one of the first times that I'd be looking for something to potentially move the market, potentially move the Aussie. So if I consider what that number is and needs to be, if you then click on the number here and see where we are with business confidence. These are the numbers that we've kind of had, and if you look, sort of, it tells you these are the numbers and the dates down the right hand side here, and this is the chart. But look what's been happening recently: really big builds in business confidence. And if you check out the metrics and sort of like what that would suggest in business confidence, it does suggest that this is going to continue to rise. Now, average, this is NAB. Yeah. Average numbers here. I'm just checking my data here, just alongside it here. Yeah, so there's high, it's high and it's pushing into the higher band here. And let me just see if we're in the high band. No, we're high, but we're pushing into the higher band. The average in the higher band is around 10. So some of these are really high, these 20s, but if you look sort of over a period of around about 15 years, because of the way it kind of swings up and down, the average kind of high number is about 10. So when it kind of like drifts into, and we're currently at 7. So that was the previous number, and jumps. Look, -3 to -1, 2 to 5 to 7. So we're really jumping up, and that would suggest Aussie strength. So this would be a flag, really. When I look through these numbers, this would be a flag to say that we should be looking potentially for some Aussie gains coming into this week. Now we'll have a look at what that might be up against, and I was quite interested against the pound, but the pound. The UK posted better than expected numbers, not good numbers, but better than expected, and I'll show you what that means. And it might, because they were better than expected, but still actually quite bad, we might see a pound Aussie short still potentially on the cards. Aussie's not particularly strong this week, but over the month it's pretty good up against everything except the yen. Now, if you take that information sort of like for the seasonals, that doesn't seem right. The Aussie strengthens against all but the yen. So actually, If the seasonal suggests weakness in the stock market, it would suggest some yen strength. And there is some yen strength out there, but not significant. But we'll have a look at that in a minute. Um, so Aussie potentially against the pound. Now, this is the problem with the pound. The pound last week, or the UK last week, we go back to the economic calendar. And I'm just going to plug in last week's dates. I was looking for some weakness from the UK, and the important numbers from last week were um, services PMI that came in better than expected, so 54.2 from 51.8, so a decent growing number there. And also the construction PMIs, which were here. Construction PMIs negative 45.5, but a surprise to the upside and a beat from the previous number. So growth. Now, both those 2 points are some pound strength. The fact that it's under 50 is maybe a little bit of a signal, but in that lower level and growing, it suggests that maybe the economy's bottomed out in this particular area. Now, whether that could sort of like push the Aussie higher against it is going to be tricky. But let's have a look at the Aussie versus the pound as a possible trade idea. So really, what you're looking for with those you want those business numbers to be released first. So business confidence. So you want NAB business confidence to come out, and then you can have a look to see whether there's a trade on. And if you sort of like minimize a little bit here, we are in a bit of a range, a bit of a trading range. And this would suggest actually that there might well be a bit more upside. So maybe what we really want is for those business numbers to come in, NAB business numbers to come in a bit weaker, because those pound numbers last week were pretty good from a surprise aspect, and there's not much from the pound this week. So this might suggest that if we are in this trading range, can you guys see that all right? Is it light enough? If it's not, then let me know. But I'll try and blow it up a little bit here. I can't make it exactly what I want, but that's at the lower end of the range. So on Tuesday we might well see those numbers, and if those numbers are under 7, if we actually see some cutback in business confidence, then we might well see the Aussie versus the pound versus the Aussie actually strengthen. Because if you then sort of like go back to this week. Let's go back to this week and see what we've got out from the UK. Retail sales, BRC retail sales monitor, not that significant. And you would struggle really. Look at even the flag, and forget how important the numbers are. We're struggling to find even a Union Jack down here. House price balance, that won't be significant. GDP, as I say, is a consequential number. Trade balance. Now, this might be one area. This might be one area that that could actually kind of change things up a bit. But when you look at trade balance, it's been so low for such a long time that, again, if this surprises to the upside, they're looking for minus 21.6. If this surprises to the upside, then pound strength should come in. So we're sort of like trying to build on the idea from last week. Last week, surprise to the upside in both services and construction. And I was looking for shorts, I was looking to short the pound, but it didn't transpire that way. So it flipped around because the numbers were better than expected, and now we could build on top of that. So we could sort of say, now this is an if the NAB business confidence from Australia comes in weaker than 7, and if it's significantly weaker than 7, then that's going to be an even better signal. But if that comes in weaker than 7, and UK trade balance comes in better than minus 21.6, which, considering how low it is, has got a decent chance of doing that. It doesn't really stay down here for that often. Look how low it is in comparison to history. Really, really low. So the trade balances are in the extreme lower band, and when they're in extreme lower band, the most common thing that happens. Okay, this one did fall even further. A few of these did fall a little bit further, but generally speaking, this is a turnaround point. Is that turnaround point this week? Last week's numbers suggest that the UK is doing slightly better than expected. So maybe not, but we'll have to wait for the number. If that number comes out and there is a trade opportunity to trade the pound Aussie long at the lower end of this trading range, then I'll be trading it. I'll be looking for an opportunity to trade the pound Aussie long. Now, seasonally, the dollar tends to strengthen a bit as well. So if we look at stocks now, if we look at what might happen with the US market, the one that you're going to get the best movement out of, and this is the point you need to decide what kind of trader you are. Are you a short-term trader that wants high volatility, or are you somebody that's looking for longer-term moves that wants a little bit a slightly easier moving market? Now, if you want high volatility, you want to go to the Nasdaq. It's the one that moves around the most, and it's the one that will be most affected price-wise by the data on the day. So the S&P will be affected as well because the big Nasdaq companies like Amazon, Apple, Microsoft, those guys, and Nvidia are in the S&P, and so even though there's 500 companies in there, to absorb a little bit of those movements, it will still get the main weight from what happens to those companies. But obviously the Nasdaq, there's hundreds of companies, so that's going to get the most volatility. So if we have a look at where the Nasdaq is, it's up here, US 100. Here we go. Now, if we look at this, I don't really like the color of this chart because I think it might be difficult for you guys to see. So I'm just going to lighten it up a little bit. Is that any better? Is that any better? Hopefully it is. If we look here at the chart, this is a head and shoulders pattern. It's not particularly clean, but it is a head and shoulders, and that's a distribution pattern. And really what we've seen here is, and the reason I'm looking at this is because of the seasonal bias. So this is pushed up, come back, pushed up, come back, pushed up. And we're looking for it to come back here. And that creates the shoulder, and the head. Okay, so the second peak is currently higher than the third peak. Now that is a bearish signal. So we're really looking for this to weaken at this point. Now, if you're kind of like doing chart analysis, what you're trying to look for is the longer term view, which of course you would do on the monthly. So we'll have a look on the monthly, and what we can see here on the monthly, what all these dots are. Oh, that's weird. Let me just have a look at my chart here. Background, foreground. Oh, that's because it's probably. No, that's all right. Okay, so if we have a look here on the monthly, what we can see. Oh, that might be, yeah. I see what that is. It's just a line. What we can see is a strong uptrend. So from left to right, you're sort of like, going to break it down this way. You look at the trend, strong uptrend, particularly from this point up. And we could draw in a line here. My lines are, yeah, that's okay. That's black. So draw the line in here and see if you can connect these lines to the most touches. There's not really a touch there because it dissects it a little bit too much. That's not too bad. So maybe sort of like, coming into this area, and if we were to come into that area there, then we would be really looking for uh, some sort of confluence into the trend line. So sorry, the trend line in the horizontal level here. So there is a potential for the Nasdaq to weaken relatively significantly from this point down. So looking at 2,000 pips from 20. So it's around about a 10% drop. I'm not sure whether it would drop quite as much as that, but the longer term trend is up. The current pattern really is a kind of a bull flag. We kind of have this kind of going on here. This kind of a bull flag sort of like look about it. Let's just change these channels down, get rid of this ray. I can draw it in here. Kind of got that going on with the this is kind of the flagpole there. So it looks a bit like a bull flag. That's obviously sort of just by the name alone it gives it away that it tends to be a bullish signal. But then if we look at the actual price action, which is kind of the third part of the process of chart analysis, the price action is saying that the last three bars with these tails is showing some indecision in these levels. Now, that doesn't mean it's coming down. It just means it's paused at this particular point. If we zone in again a little bit further on the weekly, then we'd be doing the same thing. So the chart analysis tells us we got an uptrend going on here. Difficult to draw any kind of trend line. It's so kind of aggressive. It's a parabolic move to the upside. So difficult with a trend line there. I do see one here. Let me just get rid of these. Do you see this one here? And that one's pretty good. Look how pit perfect that is. So these pit perfect touches are really useful because what this shows us is that if this is to break down and we trade after the signal, you can trade before the signal, of course, because you might want to try and get in a bit early. That's where the more money is made, but it's just a bit more risky. But if we're going to trade after signal, then a break of this line is now going to give us a pretty good signal because this line's got enough touches to suggest it's in play. Obviously, lines can move, but it's suggestion. The suggestion is that we have probability on our side. If this was to come down, break and retest, with a retest of this support level, support here, support here. So the support level there. So a retest of confluence of the support level and the trend line would suggest at least 2 weeks. You might be looking at more. It might sort of stay inside this pattern here for a while, then all of a sudden break down. So you might not be looking till October. But if you were going to wait for the technical signal, you're kind of at this stage, things might look differently in a month or so, but right at this stage, this is suggesting it needs to pop down. And then if you want to take it on the break, you take on the break. But if you want to wait for the retest, you're waiting for a retest around about this level here, near the horizontal level and trend line, which is around about 23,500, 23,400, something like that. So that's what the weekly would suggest. Now, if you're doing the same chart analysis, you're saying uptrend, high highs, higher lows. Most recent pattern here really is saying that this is some sort of, it's kind of a wedge, maybe a channel kind of like forming along here. And again, that would need to be broken to the downside to get confirmation that the trend has changed. Not that there's a downside opportunity, because you could trade it from here and look for some downside into the point where the trend does change, and either hold on to it, take some profit, do whatever you want to do. So you might sort of decide to get in a bit earlier, but for this to really kind of give you the signal that the trend has changed, we need to break down this trend line, break down this support line, and then we can look for potential shorts, and that would be in line with the presidential election seasonal pattern. So most recent bars then is the last thing. So first thing is the trend. Second thing is the recent pattern, which is like a channel. Third thing is these bars. Bars are negative, very bullish, but no break to the upside. A hold at the highs, then a hanging man. The hanging man would be bearish if the low was broken here. See, it was a hanging man. This is like the head here. That's the head of the hanging man, and this is like the legs. So they call that the hanging man. So the hanging man would be bearish if the low was broken. It's a bit of a flag rather than a trading opportunity, because you can see it didn't break down the week after. But there is an inside bar again showing some indecision. We got another kind of doji looking bar where the opens near the close with tails either side, so more indecision. So last 4 weeks have been pretty indecisive on the Nasdaq. That suggests that we are early for a trade either way. But there might be an opportunity to either trade the range or take a short position and see if it starts to break down in accordance to the seasonals. And then we finally go to the daily. And the daily, again, you're doing the same thing. So the trend is up, high highs, higher lows, but it's changed recently. So the trend has actually changed. It's not high highs, higher lows anymore, because we had this over here, which is a lower high. So we got a lower high, creating that head and shoulders pattern. The neckline of the head and shoulders is here. And it's a pretty good line. Perfect touches there, there, and there. That's where it suggests it's in play. That points to the possibility of this coming from this point down. So the recent trend is stalled and created a lower high. Now, the fact that it's not a lower low means that it's not a downtrend. It's just a stalled uptrend, and potentially it's in a stage stage 3 where we're just kind of like potentially turning. Is a possible turn. I say potential because until we see that lower low, we don't have confirmation of trend direction. What we've got is a move here which is very, very indecisive, and suggesting that this is more likely to sell off into the neckline and either bounce again or go through, and then we do really have a trend confirmation that we can take. So early to go, but trend stalled. Most recent pattern is this head and shoulders, which again is sort of like pointing to the downside. Then the most recent price bars, well, we had this hammer here, creating a little bit of upside, stalling at the highs. The hammer's the same as a low test bar. It's this one. Stalling at the highs, and then this doji. Now that is a beautiful doji in as much that it is opening right on the close. There's not even a body. So the previous bar, I called it a doji, but on the weekly, this you treat it as a doji, but it's called a spinning top because it's got some body. And that also kind of shows indecision. It can sort of like lead to kind of bearish price action. So that's a spinning top, but this is a doji, which is the type of spinning top. So if the lows get triggered, it suggests downside, but it might be shallow. The highs get triggered, it suggests upside, but who knows where that one goes. So we are looking for some possible weakness. That feeds back into currencies to suggest that the Aussie might suffer, maybe even against the yen. We could look at the Aussie NAB business confidence numbers coming in weak, possibly sort of like putting some stress on the Aussie. Same deal with the Aussie. Look at this. I mean, this is a monthly chart. The trend on the monthly chart is head and shoulders. So again, sort of showing Aussie yen. And the reason I bring the yen in is yen is associated with risk off, Aussie risk on. Left shoulder, right shoulder, and head, and then there's the right shoulder there. So the most recent pattern really is downside. We've got a lower high here as well. Lower high, we've got lower low, lower high. So Aussie yen is pointing lower. So if that NAB business confidence comes in below 7, that's going to possibly give us a little bit to go on. GDP surprising to the upside, we would obviously need from Japan, or flat would be okay, but we don't want those numbers to be weak if we're going to be trading the Aussie yen short. Be careful getting into these things, because if you hold overnight, then it's going to cost you money. So you could be flat on the trade, but be losing because of the swaps. So you got to be careful. Right. So what's this saying? Most recent trend is lower high, lower high, lower low. Most recent pattern, really, I mean, the most recent pattern kind of goes beyond the most recent trend, and that is this head and shoulders pattern here. And we're looking really at the neckline somewhere along here. It's not perfect touches on this one, but because of the tails coming through the line, but it's somewhere around here. Maybe it's maybe we can draw a better line than that. Let's see. Probably somewhere around there. I don't like it when it's that low and that far away from closes. There's the close price there. So I'd say somewhere in that band, we might sort of like see somewhere in that band there that we might sort of see a potential price point. But we would be looking at this possibly coming down. Now on the monthly, this one's in play. So we don't know what the September one is. Hanging Man. There's a hanging man there on the monthly from August. A break of those lows is going to suggest some downside. Let's have a look at the weekly. The weekly is in an uptrend because this has broken through these highs here. So the weekly is actually sort of counter what the monthly is doing, but it's in an uptrend. The most recent pattern is this, which is a channel, and it's very indecisive. Last week's high test is kind of, this is also looking a bit like a shooting star. Look how that opened above the previous one's close. It's shot up and it's really closed near the low, but it's not really decisive. But that does give us a little bit of a hint that this might start to weaken into this week. If we have a look now at the daily, is, let's have a look at what pattern we got here. And really you want to kind of draw these patterns with support and resistance and see if you can kind of get, it's like a broadening pattern kind of going on here. And it's also, it's in a stalled uptrend. I'd say that high not being broken, I like closes, but that high not being broken kind of puts it in a range. And that range, really, because of the broadening pattern, could come all the way down and give us another kind of area meeting the line of the broadening pattern down here. So so that one could actually come down lower than this low here. So starting at a lower low. Another one that looks like a high test bar there, and it's right on top of resistance. So in just on technicals alone, Aussie yen looks weak. Then if you bring in the potential for those numbers to come out, and we're really looking for those numbers to help us out here. If those numbers don't help us out, if I see NAB business confidence come out and it's 7 or above, 7 and growing, I probably wouldn't touch the Aussie. But if those numbers are coming down 6, 5, 3, really negative, then I'd be all over it. I'd be quite happy to sort of like trade the Aussie yen as a short. And the yen is a potential long because of the presidential election seasonal kind of bias. So there are a couple of things I'm looking at. If you guys have got anything else you want to talk about or add, then please feel free, and I will have a look at anything else. But they're the sort of that's where I'm edging towards right now. One thing that probably should be talked about as well is the dollar. Now, because this is the interesting thing about the fundamentals that might drive the stock market. If you look at really what's been going on, if we look at last week, and fundamentals are a very broad area because you might sort of look at data points, but Trump might come out and say something, or some legal wranglings might be going on in the United States, which is going to be kind of no good for anybody either, and that can drive the market. Or there might be a central banker being sacked. That might be another thing. Or you might get a central banker making a speech. So all those things are to be considered when trading the fundamentals. Now, if we look at what was going on last week. Now, this was really significant at the end of last week because what Trump and investors really want is for the central bank to come out and say, "Yep, we're lowering interest rates. We're ready to go," but they really want the environment to say, we're lowering interest rates because we can, because we've got inflation down below 2%. And incidentally, the ECB are likely to leave the interest rates where they are because they're aiming for 2%. And we had a 2.1% print of CPI data. So unlikely to lower interest rates when the CPI is at 2.1%. So they're likely to leave them where they are, maybe raise them, but it's unlikely. But I'd say leave them where they are. What they're looking for in the United States is for them to start lowering interest rates, and they just have not been on a lowering cycle. If you kind of look at the current interest rates from all the countries here, 4.5%. It's been there for quite some time. That's coming out on the 17th of September. So 10 days' time could shape what the central bank's going to do. Trump is putting a lot of pressure on Jerome Powell, and he's kind of like, he's waving his he's waving he's yielding the axe when it comes down to central bankers because they're not doing what he wants them to do. So there's pressure on them to lower interest rates. The other question then comes in: can they do it? And what we saw last week is some possible reason that they could, because on Thursday, I should say, we started to kind of get some continuing jobless claims looking pretty bullish. But initial jobless claims came out and they were bearish, suggesting that there was some weakness in the US economy, which does bring inflation down over time. Composite PMI not significant, but ISM prices came down a little bit less than expected and previous. So that's disinflation going on there. And then we had on Friday, we had some significant jobs numbers. Non-farm payrolls, 22,000. So not many bills in the employment picture from 79, and they were aiming for 75,000. So a massive miss on non-farm payrolls. Unemployment rate going from 4.2 up to 4.3. So the U6 unemployment rate from 7.9 to 8.1. So these are disinflationary figures, which could enable the central bank to lower interest rates. Inflation itself as a number is not low enough. So they might well be a bit early, but I think the pressure that Trump's putting on them might force their hand. Remind me, please, do you consider the wicks in looking at highs and lows? That's a really good question. I do, but I guess only if I have to. I have to say, only if I have to. Do you know where I sort of like will bring the wicks in is if the bar that has taken the previous highs out, if the bar hasn't closed on its highs. So if it closed on its high, if there was a wick up here, there was a wick coming there, because this bar is pretty bullish here, but closing near its highs, I would consider that a higher high. So, but the wick would come in if this was a weak break. So here, what I'm looking at, see, there's the closing prices, and that break is not that much bigger than the bar than the wick, and then you sort of like see this wick as well. So after the first bar, I might consider, okay, we've probably got a bit of an uptrend starting here, but that second bar would then bring these wicks into play for me and say, okay, it's not that convincing. So so maybe we need to break the wicks. I think usually speaking, I would look at the closing prices, but sometimes the charts then kind of develop, and then I'm sort of saying, actually, maybe the wicks need to be broken in this scenario for me to kind of like have a bit more confidence. So I would say it's better to go with the wick, because ultimately I will bring it into play if I have to. Not if I have to. If it looks like I should, I'll bring it into play. So I would say it's cleaner to just say, if you just need one rule, it's cleaner to say it's got to close above the wicks. or close below the wicks. Much kind of like cleaner um, message, much cleaner kind of signal to say that. So if you just want one rule, that's the way I would do it. And there's enough of that time that that's good as well, because look here, break of the wicks and a decent sort of like body well above the wicks there, so that's decent. Um, there's a wick there, and there's a decent sort of like body suggesting that there's some upside sort of there. So yeah, there's a wick to the downside. Not that convincing actually, that one. When you consider the size of the wick, considering the body break, not great. There's the wick there. Again, not a great body considering the wick size. So it does sort of suggest that, you've got some indecision. So there's nuances, I would say, Chong. There are nuances, but yeah, go with the rule that you want the body to be a nice clean break of those wicks, to suggest the trend has definitely changed. You're welcome. You're welcome. Yeah, I think the more you look at charts, that the more you kind of like, you get these sort of like nuanced ideas. And particularly when you bring in indicators, if everything else is lined up and the wick hasn't been broken, but the previous body has, then in my opinion, it's okay to take that trade. Um, but if you've sort of got things that are 50-50 and you want something a bit cleaner, then you're looking for the wick to be broken and significantly so. That just to give you kind of like a better signal. But that's going to be really sort of from my perspective, I suppose where I find it a bit more nuanced is that really I'm trading the data. So if the data kind of suggests I should be going in a direction, then I might not need quite as much to kind of get me into a trade. I don't need it to be as clean. But if you're trading purely on price action, then you want the messaging to be pretty clear. Um, Oh, that's a really good question. So okay. So I mean, this is case in point, I guess. So discuss the likely impact of the pending resignation of Japanese Prime Minister. Um, so there's two things about this. The first thing is that everybody knows it. So if the charts are really going to kind of like move, if you know that it's impending, that means it's basically happened. As far as the market's concerned, it's happened. So the markets probably have priced it in. Um, but the second thing is, these are the challenges that we kind of face, is that when that announcement was initially made, we probably saw sort of like a little bit of a knee-jerk reaction. And as kind of things develop, then the market starts to calm down. But I would suggest that the fact that it's impending, would kind of say that it's probably priced in. There's probably somebody right there to. I don't know that much about Japanese politics, because my focus is on the data. But the fact that there's probably somebody lined up. The market's probably already priced that in. So yeah, I personally wouldn't take too much heed in that myself, anymore. Anymore. When it was initially announced, yes, but not anymore. Okay, no problem at all. All right, 3 minutes. So yeah, anything else anybody wants me to look at, or any other questions? I'm happy to give these last couple of minutes to any questions. If not, I'll be happy to let you guys get on with your day, and see you for the next round. But may trading fortune go with you, and have a great week. If I can't see any questions, so I'll wrap it up. Have a great week, and look out for those numbers. Try and be on the right side of those numbers. You're welcome, Kin, because it's the numbers in the end that move the market. If there was no data, if there was no sort of like contraction and expansion, the markets wouldn't move. The numbers tell us about the contraction and expansion. So keep on top of them. As I say, not many that you can probably trade this week on the day, except for watch out for ECB. ECB leaves interest rates unchanged. No big deal. Expected. But if they move interest rates, then the euro's in play. But I say the one I'm watching this week is really the Aussie, possibly Aussie yen short, possibly pound Aussie long. But that's going to be data dependent. All right, have a great week, guys, and